Hello, good morning. Welcome to FX Street Currency in Play. I'm Matt Brown. I'm joined down the line by Ed Matz from Matrix Trades. Good morning to you, Ed. You well?
I'm very well, thank you, Matt. Yes, as usual, the weather is nice, sunny, heat wave in here in the UK, but there you go.
Good stuff. Well, summer's over, certainly here in the UK. But let's have a quick look at the headlines. Cable sterling, little change as UK wage growth meets expectations. Euro dollar, euro little change as Draghi speaks of structural reforms. And finally, dollar yen, which we're going to have a look at today. Dollar trades at weekly highs. So with no further ado, let's have a quick look at the cartoon for this week. This is only a trial separation. The divorce comes later as Donald Trump is chopping off or chainsawing off various branches within the US government. Quickly talk us through this cartoon and what it means to investors.
Yeah, exactly. Like him or not, one thing you have to say about Donald Trump is that he is divisive, not just American politics, global politics, everything else, but its effect on the markets. And one of the things, obviously, this week we've got the budget resolution and whether that will go through. I mean, the cartoon refers to some of the judicial Supreme Court issues. He's a man that makes you take an opinion. And like it or not, everyone seems to have an opinion about Donald Trump. But how does that affect the market? Well, it's breaking down correlations because markets are being pushed asunder. The fundamental drivers, something we talk about a lot, are breaking down. So some markets are doing very aggressive things in one direction, other markets aren't going with it. And most noticeably, not just, well, in some senses this year, but more recently, is the classic tight correlation. The one that seems to surpass all others is the dollar-yen Nikkei lockstep, and that's broken down in the last 2 weeks. And to understand what's going on there, you have to understand globally what is happening. And a lot of it comes back to Donald Trump. The cartoon alludes also to obviously NAFTA, got Canada and Mexico as well, just as what he is doing is making, he's dividing the world, he's dividing camps, and that is having a bigger impact on the framework, on the fabric of markets. And that's reflected by what's happened in the Nikkei, ramping to new highs, prompted Nick Leeson to say he's almost break even. Which is kind of a funny one. The man who lost his bearings, literally. And yet dollar yen doesn't seem to be taking part, and a lot of people want to get on the bandwagon, think dollar yen's going to catch up. So the issue is whether it will.
Okay, well, let's have a look at some of the charts. Here we are. It's the Nikkei and the dollar yen correlation, and you've already alluded to this. Look, there's a bit of a gap forming there, and will that close?
Yeah, you can see how tight it's been. I mean, the veneer for dollar yen is clearly the 10-year differential. Yet that would imply the Nikkei is going with it. What you've got to understand about the Nikkei and dollar yen is historically they weren't always together. Go back to the cost push oil inflation of the 70s. They used to do totally different things. The same with the 1980s, the major bull market that saw the Nikkei lead the whole process, and dollar yen wasn't really taking part. But since we've had deflation, this is why the 10-year is so important. Since we've had deflation, they've been in lockstep. So it begs, and there have been times since then when it breaks, that close relationship breaks. So clearly, you can see this is a chart of the last 2 months, the correlation has been pretty tight until the last week or two. And what's going on? Well, there's a simple fact, Matt, is that since beginning of October, the net funds investment in the Nikkei, which was previously about 12% overweight in the Nikkei, shot up to 23%. In other words, funds are buying the Nikkei thinking it's got good value. Now, one of the reasons why historically it keeps together is because simply that the Japanese is an export-led economy. So as dollar yen goes down, that's a stronger yen. It means it's harder to export, so it doesn't do so well, so the Nikkei stays down. What we've seen in the last few months is actually some of the stock market growth, some of the economic growth is actually coming from domestic. In other words, it's not so much an export-led economy, but it's coming from places like construction. And that is why people are looking to invest. They're looking to divest. You may not believe it, given that US stock markets are ramping so high as well. But then people are getting worried about the US with such high relative PE ratios compared to everyone else. They're looking to put their money somewhere where they can get real returns. And Japan is one of them. And so that's why what you've seen is pile into the Nikkei, but because they distrust the dollar, partly because of this disinvestment from the US and concerns about the US, they're not hedging. In other words, they're not buying dollar yen to hedge their foreign exchange exposure. And that is why dollar yen is staying down and Nikkei is ramping. And as you can see, one of the reasons why people are disenchanted is not just because Donald Trump said 6 months ago he wanted a dollar lower. People, as I said, do not trust the valuations of the US stock market. And one thing that may surprise a lot of people is since Donald Trump was elected, obviously US stock markets have continued to go higher, 25% plus, with very little major correction in that. But since then, the S&P, US stocks have actually lagged the rest of the world. And one of the reasons why is because they're yet to see something concrete, which is why this weekend, or coming to the end of this week, is going to be important because we've got budget resolution, and will we be able to pass the budget and set off in that $1.5 trillion tax ramp, if you like, benefit to the US economy. Because since Donald Trump was elected, since after the first 2 months, those stocks that will gain most from tax cuts have actually gone down. They're in negative territory. So people are saying, we don't believe it. We want to see it delivered.
And I think you've got a chart indicating that as well. If we look, the high tax stocks versus the S&P 500 really kind of lagging there. Yeah. So just moving on again to the dollar yen and the Nikkei.
So what I'm saying is it's counterintuitive, and if you look at nominal levels, it's hard to believe that the US is actually lagging. And one of the reasons why is because people do not trust it, which is one reason why the dollar's down 10% in 10 months. So that partly explains why dollar yen is not keeping up with the Nikkei. Now, obviously, the easy trade, the obvious trade is where you buy dollar yen as it's picking up today. Buy dollar yen because it's going to break higher, it's going to break 114.5, because that's what the Nikkei has done. But if you go back in history and look at previous price actions, similar conditions when the Nikkei's gone off on its own, it isn't dollar yen that catches it up. It's the Nikkei that comes back down. In other words, what it's saying is, okay, these people who haven't hedged their Nikkei exposure, if dollar yen starts breaking up, they'll go and hedge it. But until then, they just don't trust the US and don't trust the dollar, which will mean ultimately it'll bring the Nikkei back down. So that could be a complete head fake. And so a lot of people getting long, and it looks to us quite clearly that dollar yen is going to pick up in the next few days and have another go at the highs. But whether it breaks it or not, it remains to be seen. I actually doubt it. I think dollar yen is actually ultimately a fade, which presents some interesting problems for the Nikkei.
Understood. Potential pairs trade, but maybe not. Moving on, we're looking at the dollar index itself. Just talk us through that.
Yeah, well, again, it goes back to the point about the dollar downtrend. People saying, well, has it bottomed? US yields are ramping, or they've stopped ramping for the time being. Has it reversed? No, it hasn't reversed at all. This is a correction. And in fact, not only have we seen the end of the correction, I think the dollar index is the clearest mark of all, unusually, in fact, much clearer than the euro dollar, even dollar yen. And what it's saying, Matt, is that we've finished the correction. We've started the first leg down of a new downtrend. And what we saw in the last 24, 48 hours is the later stages of a correction that's effectively over now, basically saying the dollar is a sell, which makes you wonder what's going to happen in the next few days for the dollar to start coming back down again. Maybe it is. You've got the budget vote on Friday or Thursday, Friday, maybe into the weekend. It's going to be very close. You've got one or two Republicans who might go the wrong way, which means it won't go through. And there goes Donald Trump's, tax reform and the possibility, in fact, of effective government from Donald Trump, and which is going to raise real question marks, not only about the Trump trade, but his whole political future and his effectiveness as a president, which obviously would put the US dollar under pressure.
So lots to look out for towards the back end of the week. Moving on the charts. Well, sorry, we're looking at the economic calendar for today. A few things there: housing starts, crude oil, monthly budget statement, the Fed's beige book, and also China. GDP numbers due out tomorrow. What are you looking at? What's jumping out at you on the calendar?
Yeah, obviously you've got the UK that's been and gone, if you like. Obviously you had Carney speaking yesterday, and he didn't really do much to gratify. Obviously people are priced in another hike to unwind the previous, the Brexit rate cuts, and now they're looking for that to be restored, and that's priced in fully. So they were looking for something else yesterday, and they didn't get it, which means once you strip out all the numbers from the UK, there's only one overwhelming fact the next 24 hours or so, Matt, and that is Brexit negotiations, which aren't going and will not go very well, because what leverage does the UK have? You know, perhaps we can threaten to leave the Eurovision Song Contest, or we can start talking about longer term repercussions for the city and not doing an effective deal with Europe, which would be obviously counterproductive. But we've got very little leverage. So until we can force the European negotiators' Brainard's hand in Juncker, then we're going to be stuck. And we're going to be increased, and sterling will therefore be increasingly under pressure. So strip out all the other noise, and sterling becomes one thing. It becomes a Brexit vehicle. And that means it potentially will remain weak until we see greater resolution, signs of something constructive coming out. Ultimately, it's in the interest of both parties to do a deal, but obviously the Europeans are playing hardball, and until they stop playing hardball, then sterling will remain under pressure. So that's that story. Obviously, you've got the budget coming out on Thursday. If you put, let's go back to that dollar yen catch up on the Nikkei, and the fact that the euro is, or the dollar is rolling over. You put them together, one market stands out for the next week is euro yen. And typically that is, historically, but not so much recently, but typically it is a risk appetite trade. So what it's saying is the next 1 to 5 days, you could see something interesting on the upside on euro yen. As to whether it's going to be sustained, 300-400 pips higher, it remains to be seen. I doubt it very much, but there's a lot of mileage and some good entries in the interim. So I would say, even though we're flagging the dollar, even though we're highlighting this wonderful breakup in the relationship between dollar yen and the Nikkei, euro yen is the vehicle, is the trade for the next few days.
Fantastic. Well, on that note, euro yen viewers, look out for it. Ed Matz, thanks very much for joining us today.
My pleasure, Matt.
On FX Street, Currency in Play.